All right, today we're tackling something huge, a full-blown revolution that's happening right now in finance. It's a story about digital dollars, crypto chaos, and a high-stakes race for what's inside your wallet. So let's just start with a really big question. What if money, the thing that literally makes the world go round, wasn't actually controlled by governments or big banks? That's not just some thought experiment. That's the powerful, radical idea that kicked off this whole new era of money. So let's dig into that idea, a totally new kind of money. And at the heart of it, you've got cryptocurrency. Basically, it's digital money that's locked down with some seriously complex math, cryptography, that makes it almost impossible to fake. But, and this is the really wild part, it lives on a decentralized network. No central server, no single company, and definitely no government pulling the strings. It was built from the ground up to be outside of their control. So you might be asking, why even bother creating this? Well, the people who invented Bitcoin looked at our traditional financial system and saw some massive flaws. Think about it. Sending money can be slow, it's packed with fees, and it's all run by a handful of powerful institutions. The dream was to build a system where you could send money directly to anyone, anywhere in the world, without needing a bank to get in the middle and take a cut. But, like any idea that tries to change the world, this one came with a whole lot of promise, a whole lot of peril, and a ton of unintended consequences.
The promise? It was huge. People were imagining a future with way cheaper, way faster money transfers, a financial system where there's no single point of failure. And let's be real, the chance to get insanely rich really fast, that didn't just help it get popular. It practically defined the early days.
But on the flip side, the peril is just as intense. The prices are so crazy volatile, you could be a millionaire one morning and totally wiped out by dinner. That anonymity, it made it a go-to for criminals. And just on a practical level, for businesses, how do you even keep your books straight when the transactions are designed to be separate from real-world identities? And then there's this, one of the most staggering side effects, the environmental damage. A UN study found that in just a 2-year span, Bitcoin mining pumped out almost 86 million metric tons of CO2. That happened because the whole network was being powered overwhelmingly by fossil fuels. It's a massive, massive carbon footprint. So all this chaos and risk created a new demand in the market, a demand for stability. And the market, well, it did what it always does. It started innovating. This brings us to the private sector's answer to all this crypto madness. And that solution was something called a stablecoin. Now, it's still a type of crypto, but its value is tied or pegged to a real-world stable asset, like the US dollar. The thinking was pretty simple. Let's get all the benefits of crypto, like the speed and low costs, but without those heart-stopping price swings. It was built to be a bridge between the old world of finance and the new. But as soon as private companies started making their own money, governments got very interested and things got political fast. Just take a look at this quote. It's from a Democratic staff report on a proposed stablecoin law. They claimed it would turbocharge corruption by, in their view, letting a president regulate his own financial product. It just goes to show you how incredibly high the stakes are when you're talking about who gets to control the money supply. So the government's response, like this proposed Genius Act, was basically an attempt to tame these new private currencies. They tried to make them act a lot more like regular banks. The rules were pretty straightforward. You have to hold $1 in reserve for every stable coin you issue, you have to get audited all the time, and you gotta follow all the anti-money laundering laws. This was a very clear signal. Government wanted to put some serious guardrails on this new private system. But here's the thing. Governments aren't just playing defense anymore, just trying to regulate private money. Nope. They're going on offense. They're building their very own version of digital cash. And they are striking back with some serious force. And they are moving at a breathtaking pace. The Atlantic Council reports that 137 countries are now looking into creating a central bank digital currency, a CBDC. That's not just a few countries, that's 98% of the entire world's economy. So this is not some small experiment. This is a full-on global race to define the future of money. So what exactly is a CBDC? Think of it as the official digital version of a country's money. A digital dollar, a digital euro, you get the idea. But here is the critical difference. It's a direct liability of the central bank. This is not private money like a stablecoin. This is 100% government-issued, government-controlled digital cash. And right here, this is the core of the conflict. On one side, you have private companies. They're driven by profit, by innovation, by moving fast and breaking things. On the other side, you have central banks. They're driven by public policy, by a mandate to keep the economy stable. We're looking at two completely different philosophies for what money should be and who should control it. A CBDC could totally transform our banking system, and these diagrams from the Bank of England show exactly why. Right now, your money, your deposits, sits in a commercial bank, like Chase or Bank of America. But in a world with a CBDC, you could just pull your money out of that bank and hold it directly with the central bank. This process has a name. It's called disintermediation, and it could fundamentally weaken commercial banks and reshape the entire economy as we know it.
So all of this brings us to where we are today. We're basically standing at a fork in the road with two very, very different paths for the future of what's going to be in your wallet.
This is the choice right here. Is the future of our money going to be created by private, profit-hungry tech companies, the ones that are always innovating, sure, but always with their own bottom line in mind? Or is it going to be controlled by public, policy-driven government institutions, the ones that promise stability, but also come with the potential for massive surveillance and control? This isn't a small question. The answer is going to shape everything from our personal privacy to global financial power for generations.
So when you boil it all down, this whole massive, complex revolution really comes down to one single question for all of us. Who do you trust more with the future of your money? The tech innovators or the central bankers? The race for your wallet is definitely on, and the winner is nowhere near decided.